My name is John Slauson. I'm product manager here at MetaStock. With me today is Ken Hunt. Ken is a senior software engineer here at MetaStock. And Ken is the brains behind our all-new forecaster that we recently released with MetaStock 13. Welcome, Ken.
Thanks, John. I'm excited to be here. Happy to get the chance to talk about Forecaster and what it can do.
Ken, I've never seen anything like this forecaster. It truly is unique, something I've never seen in the industry anywhere. Some people are even calling it groundbreaking. How would you consider this groundbreaking technology?
Most analysis-based software that I see right now is based upon analyzing what's happened in the past. And a lot of what you see with that software is charts that show historical prices, what indicators may have done in the past, signals that were generated saying, oh, if I had bought here, things like that. Now, what Forecaster does is it actually takes that information from the past, but it adds a new dimension to that, and that is it uses past information to produce a projection into the future of what future price trends may look like.
So you are referring to these patterns, these conditions that you're analyzing in the past as events. Can you give us a specific example of what an event would be?
Yeah, Forecaster uses the concept of an event, which is really just some type of technical pattern that may have existed in the past. Maybe something as simple as there were 3 days in a row that the closing price was up, or something a little more technical that most technical analysts might be familiar with, that would be maybe the closing price is crossing above or below a moving average. There could be something very sophisticated. There could be something dealing with Bollinger Bands or standard deviations or accelerations, things like that. But the concept of an event is some pattern or some condition that repeats itself numerous times in the past, that if it occurs in the recent past, can we use that to project possible trends in prices into the future?
So you've been a software engineer in this industry for, 25 years, I believe you told me. So tell us a little bit about your background and why you find this career so interesting.
Sure. When I first got out of college, my first job was working on flight simulations, actually. That was real high performance, very detailed stuff, but I'd always been fascinated with the concept of charts and graphical representation of data. That had always been something that I was very intrigued by. In 1988, I was fortunate enough to be hired by Steve Akalis to work on the MetaStock program. I've been working on that software ever since, and I've learned a ton of things. I've found that there's no shortage of ways to look at data, analyze data, different ways to view possible trends, things of that nature. I've also learned that most charts probably measure as much human behavior as they do actual technical prices and values of stocks themselves. And that's been kind of an eye-opener for me, but it's just reinforced my fascination for the subject matter.
I think it's pretty clear that the markets are driven by a combination of irrational human emotion combined with, rational analysis. So I think it's the combination of these two that are really driving the market. But sometimes those forces get out of balance, and you'll have the irrational human side of things take over and throw things out of whack, so to speak. How does the forecaster help in maybe spotting and analyzing these situations?
Sure. What Forecaster is able to do is it looks every time an event occurs, and it analyzes what happened with every time that event occurred. It looks at what happened to those prices, regardless of what the causes may have been, whether it was rational or irrational behavior. Now, it takes that information and combines all of that into an overall view of what the trends or behaviors may have been in the past. Sometimes those trends show up, sometimes they don't. But I've been amazed at how many times some very interesting patterns have shown up when looking at past histories of certain stocks with certain events. It's amazing. I think the human behavior aspect sometimes I think is more predictable than people think.
So you often hear people say past performance does not guarantee future results. However, Confucius said, study the past in order to help you divine the future. So how would you respond to that, Ken?
Well, if you think about it, the whole premise behind any type of analysis of data is, can I learn from what's happened in the past? Everything that humans do is based upon past experience. I recently have attended some local NBA games, and I've noticed after I've attended a few that there's certain things that can happen during a game, and you can have a pretty good prediction about what people will do as a group. For instance, at the end of a game, if the home team is down by 20 points, half the crowd goes away. Now, why do I know that? Because, well, I've been to enough games that I've seen that that's the case. So human behavior for individual people might be difficult to predict, but human behavior as a group is fairly easy if you look at the past and look for some of those hidden patterns. Now, technical analysis in itself tries to take some of the human element out of it, but those patterns do still exist. And the whole idea is to try to shift the odds in your favor by just a couple percentage points, just by looking at the past and looking for some of those patterns.
So clearly you put a lot of work into this product. How long did it take you to do this?
Well, off and on, I've been working on it for a little over 3 years. There were a lot of false starts, trial and error. A lot of code was thrown away just looking for the perfect set of algorithms and different ways of producing the output so that it was easy to understand and easy for a user to visualize. The one thing is I hope nobody looks at the simplicity of the user interface of this and misunderstands the fact that there's a lot of complex stuff going on behind the scenes of this program, stuff that took years worth of effort to get it to work the right way.
So Ken, recently you sent an email around the office with this really interesting chart. Tell us a little bit about that.
Sure, it was during development of Forecaster, and I was doing some testing on different aspects of what it could do. And I actually came across one of the forecast clouds, which we'll see in a few minutes, that showed a very interesting pattern. So I actually sent an email around to everybody and I said, are you aware that stock XYZ within 90 days of the beginning of a new year, 80% of the time that stock is up by 3 to 5%. And that sure caught a lot of people's attention, and I had the proof of some Forecaster charts to actually show that. Now, what market analyst wouldn't like to know that kind of information?
All right, so enough talk, Ken. Let's walk over to the computer and have you show us this thing.
All right. Okay, what I'm going to do is I'm just going to start up an instance of the Forecaster application, and we already have that running. I've preloaded a few stocks and stuff into it, but I'll just start it up here and kind of give you a quick overview of what we're looking at here before I dive into the details. First thing you'll notice here is there's a very large chart of historical prices. This particular symbol right here is for Merit Medical Systems, and these bluish colored bars are showing prices in the past for Merit Medical, and you see the calendar scale down here that shows 2013, January, April, July, and it goes all the way back to just prior to 2009. Now the yellow arrows, I will get to those in just a second, but I want to kind of draw your attention to this list here called recognized events. Now what this is a list of events or patterns that the Forecaster application has actually identified in the history of Merit Medical. Right now, if you notice, the one that's selected says trend surge down. Now this is a specific pattern that has been programmed into Forecaster that it can use to look for certain events. Now, Going back up to the price chart, each of these yellow arrows indicates a location where the trend surge down event occurred. If you put the mouse over it, it shows you the actual date, in this case Thursday, January 23rd, 2014. And you can see that there were numerous instances of this event back through history of Merit Medical. Now, as far as projections and forecasting, which is the guts of this application, if you want to see a projection as identified by Forecaster when using the trend surge down event, all you have to do is find the last event arrow and click on that, and Forecaster will expand that. And now what we have is, you'll notice this is the most recent data for Merit Medical right here, January 23rd, 2014. Now what you're seeing here is what we like to call a forecast cloud. Now what this is showing is, based upon past events and what prices did in the past, what if those patterns were followed again, what would those prices tend to do in the upcoming 30 days? The color of the cloud is significant. The brighter the color, the higher the tendency of the prices to go within that range of the cloud. Now, something that can be just a little bit misleading on this is over here you'll notice this thing called a probability scale, and you'll see it goes from 0 to 20, 40, 60, 80, and this would be 100. Now, this red region right here, if you correspond that color with what you see over on this scale, it would be up in maybe the 80 to 90% range. You might be tempted to look at that and say, well, this is telling me there's a 90% chance that the prices are going to go through this red region. Likewise, if you look at kind of this pinkish region, you might say, oh, Forecaster's telling me there's a 60% chance the prices are going to go through here. That's not entirely true. What this is telling you is, in the past, for this pink region right here, 60 out of 100 times, or 6 out of 10 times, the prices went through this region. Now, if the prices for Merit Medical tend to repeat this behavior, those prices would indeed go through that region. Now, I stated before, this isn't a crystal ball and it's not perfect, but it is telling you that there has been a tendency in the past for those prices to go through those regions in the cloud. Okay, now just for fun, let's take a look at one of the other events that has been recognized by Forecaster. Let's take a look at this one, the Chaikin AD oscillator overbought. Now when I click on that, you notice that the yellow arrows have changed locations, indicating that Forecaster has recognized that pattern or event on Merit Medical prices at these new locations. Now, once again, I'm going to click on the last arrow, which is the most recent date that Forecaster recognized this event. And what you'll see is, based on past performance of prices, that there will be a strong tendency for the prices for Merit Medical somewhere in February, mid-February to late February, to fall into this range right here. Now, you might wonder, how accurate does this tend to be? I did state before that there is no absolute crystal ball, and I've also stated before that this pink color doesn't necessarily mean there's a 60% chance the prices are going to fall in here. What this means is that 60 out of 100 times, or 60% of the time in the past, the prices would have fallen to this level, this far beyond where the event occurred. Now, one of the neat things that Forecaster can do is you can go into the past and say, well, okay, so how accurate has this been in the past? Now, if I go back and let's go way back here, say to 2011, and there's an event right here. Let's pick this one. On September 29th, 2011, there was a Chaikin D Oscillator overbought pattern or event recognized. If I click on this, we're going to get a representation of what the forecast cloud looked like on that day, which was September 29th, 2011. Now, one thing to remember here. This cloud was constructed by the forecaster using data prior to this event here. No data in this range was actually used in the construction of this cloud. Only data prior to September 29th was used in the construction of this cloud. Now look at how amazing this tends to show that this stock actually followed what it had been previously doing with this event. The prices tended to hug in the brighter colored areas. Things became less well defined in this area, and out here the tendencies were much stronger, and if you'll notice, the prices went right through those strong areas based on past performance or based on past tendencies of the data. Now, while we're doing this, I want to show you one other feature, and that is this slider bar over here on the right that's labeled with cloud intensity. Now, what this does is it actually filters out some of the information in a cloud that maybe you're not interested in. If you look at the current scale over here on the right, you'll notice that some of the darker blues correspond with maybe around a score of 30 in the cloud. Well, maybe you're not interested in anything that is less than, say, 50 or 60 in the cloud. If you take this slider and actually move it down, you're changing the intensity of the cloud and filtering out some data. And I have now moved to where the darker blue colors now correspond to a score of 60 or higher. This can be used, as I said, to filter out some data that you're not interested in, or you can increase the intensity to bring back some of that information that may be at the lower end of a scale. And you can freely change that on a projection or even on some of these in the past. If I were to click on this in the past, and you can see the prices going through this projected cloud back on September 25th, 2013, I can once again change some of the intensities and filter out some of the lower end scores on that cloud. Or I can bring them back. Now, lastly, let's take a look at some stock that maybe everybody in the world is looking at right now. Let's take a look at Google. Now, what I've done is I've pre-selected the stochastics negative divergence pattern as recognized by Google. This is the most recent event, or the most recent forecast cloud. And if you'll notice, based on past patterns of price movement, there is a fairly strong tendency for Google to be up in the neighborhood of 6% 30 days after the stochastics negative divergence event occurs. And that's fairly significant. If you see a pattern like this where you start to see brighter colors out this far from where the event occurs, which is right here, that's a significant thing that you would want to pay attention to. And if I go back to this price plot, let's take a look at that as a projection. And it is showing that Google in this neighborhood here around February 22nd or in that region, if past patterns repeat themselves, would have a tendency to be up in this region here. So it would continue this trend. Now, just for fun, let's take a look at maybe in the past, how well has this performed? Let's take a look at this one. And you see that back on this particular event, which occurred on May 1st, 2013, the prices tended to kind of climb out of that region here, but you'll notice they came right back within this region here. Now again, this isn't always the case, and there are cases where prices will kind of forge new territory, but you'll be surprised how many times these patterns do repeat themselves in the history of the stock prices.
Okay, so pull out your crystal ball, Ken, and give us a glimpse into the future of the forecaster. What is your forecast for the forecaster, shall we say?
Wow, John, that's a great question. This really excites me because I think we're only scratching the surface of what this forecaster application can really do. Consider some things like correlation analysis. Do certain events on one stock influence prices on another? What about things external to stock prices? Maybe there are news stories with certain keywords in them that may influence stocks. What about the release of weather or climate forecast data that might influence trends in commodities, futures, things like that? One of the other things that might go in there would be something to do with maybe trends in keywords on social media that might influence some behaviors. It's really limitless to what some of the things we can do. Now, I can't promise that all of those features will end up in the end product, but I can promise that we're going to explore an awful lot of very different and exciting things coming up.
Thanks, Ken, for your time today. We really appreciate that demonstration.
Thanks, John. I really appreciate the opportunity of being here.